Economics correspondent Stephen Long joins me now with more on the surging price of oil. Stephen, what's the latest?
Oil is surging ahead again. Virginia had topped $142 a barrel in trade this evening in New York, hitting a high of $142.26. And naturally enough, the markets were pretty nervous and jittery. There were falls on the European markets in the morning trade. The futures market has retreated with regards to Wall Street, suggesting that it will open down, continuing the losses from yesterday. News out of Europe hasn't helped because the consumer confidence figures in the Eurozone were weaker than expected, and on top of that, UK growth has been revised down, with the statistician over there bringing out new estimates which have halved the growth for the first quarter, paring it back to 0.3%. Happy days. Well,
indeed. If all the indicators then are pointing down and we can see what's the writing that's on the wall that's in America, we're looking at some sort of a downturn then. What are the dimensions of it as we understand it so far?
Well, I think the situation we have at the moment is that really the world, the major economies are being squeezed by opposing forces. You've got rising inflation being driven by oil and commodities, and then you have the financial market turmoil, which is really cutting into the real economy now. And so you have weakening, stagnating growth in the United States and parts of Europe, and rising inflation pressures. And so the central banks are really caught in a squeeze. What do? The Federal Reserve in the United States has cut rates to in real terms to negative levels. It can't really cut much further because of its worries about inflation. It signalled that this week. In the Eurozone, the European Central Bank is talking about lifting rates despite the fact that we've got this severe weakening. And so there's really a difficult task of managing the fallout from what's going on. And really, it's very difficult to see how you manage that, how you pull it together. No magic wand.
Well, indeed, although we do appear to look a lot more insulated from all of this here in Australia. Is that how you read it, that we can avoid the worst of what might be to come?
Australia is definitely in a better position than much of the world. Unlike America, we don't have stagflation. We've got deflation without the stag. Yes. We haven't got the stagnation. The question is, can the Reserve Bank in Australia curtail the inflation pressures and bring that down without pushing us into recession? And will it get bad enough in the rest of the world to undermine the China effect and bring us down? But you look at the news out of the rest of the world. In the US, the housing market is it's slumped. In annual terms, all the major cities are down. We've got continuing problems with all the world's big investment banks. The possibility that another big investment bank could go under. I think that we're in perilous times, to say the least.
It's always so cheerful seeing you these days, Stephen. Thanks so much.
You're welcome.